Guess what? It's that time again. Yep, time for the Executive Edge. Welcome back to Squawk Box. We're watching shares of Affirm Holdings. After yesterday's IPO, the stock initially opened at just under $91 a share. After its IPO priced at $49 a share. Right now, as you can see, up another 8%, up almost over 105. Andrew, you have some reporting on this other than it's up?
Well, no, it was interesting because I talked to Max Levchin the night before the IPO, and then yesterday spent a lot of time on the phone talking to a lot of people around this offering. And you look at a stock price and that kind of a rise after an offering, and you think to yourself, was this a success? Was this a failure? Did you leave money on the table? Was this on purpose? What's the story here? And fascinating to me, and I think this is true of Levchin, and I think it's true of a lot of the CEOs who have left money on the table. The view inside these companies, when they're shown the various spreads and what could happen, is that they actually know that the stock may go up 50%. It might go up 100%. And a lot of them have been able or been willing to say, you know what, we're going to leave that on the table because we want to get a certain type of investor in, certain institutions who are going to be long-term investors in. And you know what, if we lose some money along the way on this quick rise, given how hot the market is now, we're willing to accept that. We'll take that. That's okay. And I thought that was such an interesting, and maybe it's just a rationalization, but that's, I think, a lot about how some of these CEOs who are involved in these IPOs are thinking about it, and also thinking to themselves that it is a hot market. And you know what? 6 months from now, 9 months from now, 12 months from now, it's not clear where these stocks will really trade. So they're actually happier.
Andrew, how many times can we have this conversation, though? And not say, so how much did they sell? How much does he have left? So now everything he has left is now priced at $105 instead of where it would have been. So it's not as much about the initial amount of money that you bring in. I would. How much does he have? How much did they sell, and how much is still left in the company?
Oh, sure.
So
it's a small part of the company.
So that now the entire company is valued at this level. What good is it if you raise a little bit of a pittance at the beginning and the stock doesn't go up and the market cap doesn't double? I don't understand why you even question whether money was left on the table when the entire company is valued at twice as much.
Well, clearly, the reason you raise the question is because you say to yourself, was this thing terribly mispriced? And by default, it has to be terribly mispriced if it goes up 100% in 24 hours, meaning whatever price you offer. That part unto itself is mind-boggling. The thing that's interesting to me is not actually the idea that the whole company is worth that much more tomorrow, and therefore the 90% that they left on that they still own or hasn't been put into the market has gone up. Sure, but the larger point is that what I'm suggesting to you is that some of these CEOs are saying to themselves, I know this market's hot. It's actually too hot. And I want to get a certain type of investor who's going to stick with me for a very long time. And I don't want them to lose money. So you know what? Let's take it at a lower.
Shepard Smith here. Thanks for watching CNBC on YouTube.